Hello, it's Sid from Elliott Wave Plus, and this is our quarterly premium plan webinar. It's January 12 of 2021, and we hold these webinars quarterly. They're all about our premium plan, which is pretty much all about our algorithmic um, trade signals. So before we get started, I'd like for you to be aware of our disclaimer. It is at our website, elliottwaveplus.com. You go there, scroll to the bottom of any page, click on the Terms of Service Disclaimer tab, and it's there. It's there all the time, so please go there and read that. If I were to summarize it in one sentence, it would be there's risk of loss in all trading. Also, when we're talking about the algorithmic trade signals, I think it's very important to mention something very specific in the disclaimer, and that is that past performance is not indicative of future results. That's standard disclaimer terminology and is required that we issue that disclaimer. So today we're going to talk about the premium plan, and I'd like to show you kind of how it works, the nuts and bolts of how it works very quickly, and then we'll move through to the algo and how to best utilize the premium plan, which is our premier service. So I'm going to move back to the website here, and we're going to go, if I'm logged in, and if you were a premium plan member, you would be logged in as well. And you could go to nightly reports here. And by clicking on premium plan nightly algo reports, this is where you would find our report that we send out every night at around usually on average around 6:30 in the evening Central, the Chicago time, would be about the average time that we were able to scoop up all the information, put it in report format, and take all the screenshots and get it out to you. So this one is for Jan 12. That is today. So this one is a fresh one that's just posted. And when you get there, you'll notice that you can access all of the individual screenshots associated with the premium plan right there in a viewer that's embedded at our site. And that includes um, some new things we've added for 2021. That is our 240-minute ADX plus charts. These don't necessarily show automated or back-tested signals, but they show some important indicators that and on 240-minute charts instead of the standard daily charts that might assist subscribers in dialing in the trade just a little better, being more specific, a little closer to where the same basic signals that are producing the signals on the daily charts are also producing them on the 240s. And so that is, for instance, there's a crude oil 240-minute chart, and you can see that it's been in a big green bullish box. That green box, by the way, is called a AMA system buy zone. So it's been in a buy zone ever since back here, and obviously that's been a good one to stick with. Although there's been some signs of weakness or overextended business during the green box, it still is in a green box. And so a lot of times when you get these brown boxes, that means the ADX on a 240-minute chart, this is the ADX line here, is over 40, and the trend is pretty overextended. Many times that'll come in right at the end of a move, But sometimes if you're getting multiple ones in a green box, you're probably in a wave 3 if it's a stock item, or a wave 5 if it is a commodity. And so oil has been very strong lately. But typically, when you see a brown box on the ADX 240-minute charts, and then you see a Walter Bressert, that's the red block right there that comes from this indicator down here. That means that it might be wise to take profits. And like I say, sometimes you get multiple ones of those brown boxes during an extended wave. And we just got another one tonight on this 240-minute chart. So that was crude oil. So I have an informational box that I'm going to put on these 240-minute charts for you every night. I don't have it on the crude oil screenshot yet. I need to get it on there. That explains what the green and pink boxes are, what the indicators are showing us. And there's some new additions, like this is the Dow Jones Industrial Average YM contract 240-minute chart. New additions to this template that I think are very helpful. And this is one we're going to be using a lot this year. This is the money flow index, or which is basically an RSI that considers volume. And this is and then the black line is just a regular RSI. And when you have the money flow, that's the blue line, get up into extreme territory, if it's above the RSI, a lot of times that means that this trend may not be over yet. It doesn't always mean that. It isn't perfectly consistent, but many times it can have that meaning. Let me see if I can shoot through real quick and see the S&P, which I think, let's see, we have GDX, gold, NASDAQ, Russell, silver. Okay, here's the S&P, and it isn't even up in overbought territory, even as high as it got up here. So I think these aren't necessarily showing you signals, but there's maybe allow you to dial in your entries just a little better. They're a new thing this year. If you're a premium plan member and have any questions after you read what the indicators mean here and how to interpret what's going on, send me an email. And so that is the 240-minute ADX charts. Then the charts that actually show the signals are called the AMA charts. So I'm going to go down to the S&P. We'll kind of specialize with the S&P today. You can see you have a daily chart of the S&P, and you also have a sentiment chart on the S&P. So we'll show you both of those. So this is the daily chart that produces the signals associated with the premium plan. And you can see the last signal we got was a buy signal on Jan 7. And then just today, at the end of the Jan 12 candle, we got a red block, and that means get out of the trade. There's a loss of momentum, and just get flat for now. And that trade ended up being pretty much just straight up break even trade. And it's saying sell at market. In other words, you're in long, and it's at the open of the Jan 12. It's saying get out, sell at market, get out of there. We'll wait for the next signal. I'm gonna show you a live chart on this where I can show you a lot more information about those signals and how to place orders associated with the signals here in just a second. And then also, we always include for the items that have sentiment available, a sentiment conditions screenshot. So this is on the ES contract, and it shows that the commercials as a percent of open interest all of a sudden are heavily short. And the commercials on a 6-month look back all of a sudden are dipping back in their bullishness. And the daily sentiment index actually was, I'll have to look in a minute, but I think this peak right here was at least an 85. I think we ended at an 85 today, but the daily sentiment index basically is the percentage of retail traders that are currently bullish. And when it's up in the high 80s or early low 90s, something like that, that is a warning sign that traders are all on one side of the boat. And many times when that condition occurs, it's a warning that the boat is about to capsize. Um, just a real quick note about this particular edition we're having here in January of 2021 is this chart's been making its way around the internet. And it shows that the euphoria, the bullish euphoria in the stock market here in January of 2021 has eclipsed the bullish euphoria that occurred in the stock market back in the 2000 high, at the 2000 high, which I never thought we'd ever see that again. I was a market participant at that time, and the bullishness was just so rampant. People were buying, especially .com stocks that had never had a dime of revenue. All it was an idea that they took public, and they had been all anything that was .com oriented had been screaming higher, and that was followed by an 80+% crash in the NASDAQ at the time. And so this kind of euphoria that we're having right now, it's rather historic. And I just kind of throw that in as an extra note of importance surrounding this particular the timing of this particular quarterly premium plan webinar. So back to the website. Let's see, where is that? Got that here somewhere. Oh, well, I may have closed it out. I'll just go back to the Trade Navigator. Okay. So let's look in a little more closely at a couple of things here. I do want to get back to the website and show you the spreadsheet that we send out every night. I happen to have a pretty current version of it right here. And so you get a PDF of this every night, and it has all of the different items we cover: the Dow Jones Industrial Average, S&P, the two different leveraged bullish and leveraged bearish ETFs associated with the S&P, the NASDAQ, a bullish and a bearish 2 times leveraged ETF on the QLD and the QID, on the NASDAQ as well, the Russell, the VIX, the energy sector, XLE, financial sector, KBE, gold miners, GDX, the German DAX, emerging markets, EEM. These are all the items that we show you nightly algo signals on them. Treasury notes, bonds, basically, the 10-year, the ZN contract specifically, crude oil, gold, silver, US dollar index, Canadian dollar, US Euro USD currency pair, and the Australian dollar. So all of those, we show you information every night that includes my current Elliott wave count on each item, where the cycles analysis, which direction it expects price to move next and for how long. Whether it's got a new buy signal. If it's got a new buy signal, then that's color coded as green. This was yesterday's edition. If it's got a new sell signal, that's color coded in red or pink. If there's an action item that isn't necessarily a buy or a sell, then it's color coded in yellow, and that usually is an exit. For instance, silver had been on a buy since 1229, and it says exit the trade on 1.7, get out, and that trade got out of there in profit. And then the U.S. dollar index, it was on the sell signal on 1.6, and it's on the very next day. It's nope, get out, go flat. Same thing with the euro. So, except the euro was on a buy, and then it got stopped out the next day. And then it also shows you sentiment information over here on the right side, like the DSI once again, and you can see that a couple of days ago, let me go back here, we had some pretty lofty DSI numbers. The S&P was at 84, NASDAQ at 85, the VIX was just real low at a 10, and that's what we're seeing right now in the markets is lots of really extreme DSI. That silver was very high, 87 on that day. US dollar index was a pretty low 21. So we really are kind of, when you just scan down through just the DSI numbers, you can get a pretty good idea of whether we're in a fairly stretched condition in the markets right now, and we certainly are. So that is a summary that shows you what kind of action you can take on a particular item. So I'm going to zoom in on a couple of items very quick and show you, for instance, some actions you might have taken recently based on the Algo as a premium plan member. The last really big winner on the Dow Jones Industrial Average was right back here. We got a buy signal on November 3. And the way the algo is working, we've made some changes to the algo for this new year. And if it is beneficial, we are able to recommend that you, after a signal candle that is a particularly long, it's a longer than normal signal candle, to look for a partial pullback before you go long. So I'm going to turn off the video of myself so you can see the entire chart, including the upper right hand corner. And so you can see that that candle opened. As a matter of fact, I can tell you by hovering the mouse over it up in the upper left, it tells me it opened at 27,401, but it actually entered after a pullback of specifically 190 Dow points. And the reason is because this was a long signal candle. And the way you can tell if you are to wait for a pullback before entering the trade is if the signal candle has a little circle under it. And specifically what that means, and I can show you, there's some underlying indicators. We use true range and then a back-tested moving average of the true range indicator to determine if the signal candle was longer than typical or longer than average. And so that little histogram bar was green, and that means that that signal came in on a longer than normal candle. So on that one, you want to wait for a pullback of 190 ticks, or in the case of the YM contract, that's 190 Dow points below, enter long there, and then place your stop. And the fixed stop that we use on longs, recommend on longs based on back testing, is a 320 point stop on the Dow Jones Industrial Average. So at the end of this candle, you would have gotten the nightly report. It would have said you've got to buy on the Dow Jones Industrial Average, buy signal. So, and then you look at the chart and you see, okay, that this candle, this futures candle, would have already opened by then. And you could go ahead and place a limit order. You'd know what the opening price was. You place a limit order 190 ticks below that the opening price of the next candle, which in the futures market, that candle opens at 5 p.m. Central Time. And you get the reports at about 6:30. So this actually gives you a little bit of leeway on some extra time you've got in order to get your orders in if you're trading the futures market. And then not only can you figure out where your limit order is going to be, but you can associate a fixed stop with that is 320 points. So as soon as that below that, so as soon as that order fills, the stop order will go in as soon as it fills. In Thinkorswim, that is called, I know a lot of you use Thinkorswim, that is called a buy custom. So you can right click in the middle of a chart on Thinkorswim, a futures chart for in this case, or a stock chart if it's a stock or an ETF, and select buy custom with stop. And and I'll show you when we get to the S&P, I can show you the exact terminology on what type the order types would be on that. But anyway, I wanted to finish on the Dow Jones Industrial Average here. That was an outstanding signal, and that trade ended up making approximately trading one contract at a time, $13,595. And so these big green boxes represent winning trades from the past. So if the algo had been set to current settings the last 3 years, and please remember that we do a re-optimization of the algo settings every 3 months. Most of the time they change very, very little, and so most of these trades came in real time on whatever settings were in place at the time. Very, very similar to what you're seeing now. We do continue to make some improvements to the algo, and for instance, this particular trade, I believe, but would have gotten stopped out had we not come up with our new system of waiting for a pullback after a long candle. It would have gotten stopped out before it went much higher. But anyway, this winner was still in place, and that was a short. So the two biggest winners recently were, one was a short and one was a long. And then all these back here were winning trades. The losing trades you can see with the dark red squares here, there's one. And recently it's been a really tough market because the market's been very chopping narrowly ever since ever since this candle right here, ever since mid November. It's been a very narrow grinding. It's a very difficult environment for automated trading, but I can tell you these difficult environments for automated trading often give way to outstanding environments. So narrow, choppy trading will often turn into trending trading, which is going to be the most effective way to get these big winners, is when you have a trend or a breakout move. But there was a loser there. There was a winner. There was a loser. There was a loser. And so it's been alternating between small winners and losers ever since the middle of November, and it's attempted trades 3 times to actually 4. It's on one right now. It's currently slightly in profit. So currently we would have 2 winners and 2 small losers ever since these 2 big ones. Brian asks, what is a maxed closed out drawdown? And that means that over the last 3 years, during the worst performing period for this algo, had the settings that we have in place now been in place the entire 3 years, that there would have been a drop in net account equity of that amount from peak to the low point during that time. Okay, and I'll show you that in just a second. The way we get that is through our backtest engine. So we're going to look at the actual strategy here, And there's a number of rules for entering, exiting. What makes for a buy signal? A buy signal is the large green triangles. A sell signal is the large red solid triangles. If there's a circle above that large triangle, it's suggesting waiting for a pullback of a certain amount before getting into that short trade. Same thing with the long trade, but not all of the. But for instance, this January 7 buy candle here was such a short candle, it there was no circle there, and so that one got in at market on the following candle at market. So if it isn't a long signal candle, if it didn't have one of those circles, then it just says get in at the opening price of the following candle. But so we can back test on a number of parameters. The way the algo basically works is this moving average here. It's called the adaptive moving average, or AMA. That's why we call these our AMA um, uh, algos. The AMA is kind of one of the critical components. And the AMA, basically, the slope of the AMA, it determines trend. So notice that the AMA line, the adaptive moving average line, set in this case for a back-tested 13, 2, and 30. See, we can back test those for those parameters here, and we always do. And we look for a range from 7 to 13 on the 1, 2 to 6 on this one, and we never back test for the 30. We just leave it alone. That's based on Perry Kaufman's recommendation. He invented the adaptive moving average. And so as long as that's green, it is only attempting long signals, long trades. As long as that is red, that means it is sloping to the downside. Each candle that moves along, that adaptive moving average is lower than it was at the prior candle. Therefore, it is sloping to the downside and is red, and that will only attempt short trades when it's red. And so that's your trend, the item that indicates trend. When at the moment that it turns green, if the Walter Bressert, this is called the WB-RSI 3M3 indicator. It's an old indicator that Walter Bressert invented that is a double smooth RSI. It's a RSI with standard settings. And you take a 3-period simple moving average of the RSI. Then you take a 3-period simple moving average of that moving average, and that is the Walter Bressert. And then there is a moving average of that. This is all a system that Walter Bressert came up with decades and decades ago. And and he and Perry Kaufman, who invented the AMA, are two of the most gifted technicians that ever lived, and guys that came up with indicator-based automated signals. And so I've combined those two. And if the Walter Bressert is on a positive crossover from its moving average, and we back test that, it's not always the same. In this case, it's a 10-period moving average of the Walter Bressert. It's on a green crossover. If those are in agreement, then it says go long. And then it'll stay long until the Walter Bressert gets a negative crossover of its moving average, and that's when it says, "Okay, get out." The reason the algo has worked so well now for so many years, really, for us, is because if it is a trending move, it doesn't exit prematurely. It sticks with the trade until it has a definitive loss of momentum. And look at what a beautiful exit signal that was right there, almost right at the top tick of the move. But it was sensing a loss, but the adaptive moving average was still green. Well, it's good to ring the register and scoop in those profits, but it's also good to let the winners run and cut the losers short, which is exactly how I designed this algo. So we backtest on the moving average of the Walter Bressert as well as the settings of the AMA. Those are the basic nuts and bolts of the system. And then we have this new system that looks for, tries to determine if we have a signal candle that is longer than normal. And the reason we developed that is because we noticed that we were missing out on a few moves because we get a nice long signal candle and then the algo will get in at market, and then you get the inevitable partial pullback before it would continue higher. And so we actually invented this way to back test, determine what defines a long signal candle, and then how big on longs and how big on shorts of a pullback should you look for before you get in. So that's all back tested in there. And then, of course, we back test on the size of the stop. The size of the stop is absolutely critical. Like, for instance, if I look for like $100, and we do this in dollars. So 100. So this is figuring one contract, one YM contract, and so each Dow point's worth $5. So if I run a back test and look for the highest amount of profit, it says that it actually should be set at 1700. The reason is because we have a little bit more data. The best stop would be 1700, but anyway, we chose 1600, and you can see that the difference between the net profit amount is very small, and the winning percentage is quite similar. Might want to change that to $1,700 dollar stop. Matter of fact, no, I'll leave it. I'll leave it. I've got a bunch of settings that are based on that, so I'm just going to leave that as is. But I guess what I wanted to show you was the size of the stop is important, because look at the difference between the profitability if you use too small of a stop. It destroys the profitability if you're not letting the trade breathe. But also, if you use too big of a stop, then there's some huge stops up to $3,000 here that didn't bring any additional money. And so there's a sweet spot on the stop size of the stop that the backtest engine can develop. And one other thing is I'll say, let's see, no, I don't want to save changes, is that when it comes to the size of the stop, notice that this does not backtest well using a trailing stop. A lot of people really want to use a trailing stop, and there's a very specific reason why it doesn't need a trailing stop. So I'm going to show you on a back test real quick. Now, here we go. I'm going to leave all the settings the same, and we have here exactly how much profit it brought in, 123,000 during the back test period, the 3-year period. So that's trading one contract at a time, starting with account size of about $12,000. They brought in $123,000 worth of profit over 3 years. That's sticking with one contract at a time. Well, in real life, as that account size grew, you'd start trading more contracts. And so in real life, that could be a much larger number potentially than that. But let's say I wanted to use a trailing stop. I'm going to add a trailing stop, and I'm going to back test for the trailing stop. And so it made 123,000 without using a trailing stop. Now I'm going to back test it to see if the trailing stop can assist in bringing in more profit or increasing the winning percentage. Well, it increases the winning percentage just slightly. The other winning percentage was around 54%. So we can get the winning percentage up to 60, but look how much less profit. 106,000 total profit as opposed to 123,000 profit. And the reason that we don't need the trailing stop is because of the way we exit the trades, and they're based on the Walter Bressert crossover. And so, um, even though this stop, the entire time this trade was on, would have been sitting down here somewhere, it still would be sitting down here on this day here, but um, that has allowed this trade to breathe and move higher. And then once the Walter Bressert decides that it's time to get out, that's when it's time to get out, not on the trailing stop. And it really makes a positive difference on the total amount of bucks that it can bring in over the back test period. So there's the Dow Jones Industrial Average. One other thing I wanted to show you very quick, I'm going to get it back to the way you're going to see these on the nightly report. Um, there's no need for you to see that true range stuff. All you really need to see is that circle to let you know that, hey, there's special conditions here on entry on the candle. Wait for a pullback. But I've added this indicator that's the money flow index versus RSI. So the RSI is in black, the money flow index is in blue. When you get the really dark red stripes, that means that the RSI is in overbought territory, but the money flow index is lagging it. It is not above the RSI, and therefore volume, the money flow index is RSI that also considers volume. The volume is lagging in overbought territory, and that is often a sign that you've got a pretty big pullback coming. And you can see how beautifully that worked here as an indicator. That's one of the bigger pullbacks we've seen lately. And we're going to start putting these pink stripe right after the overbought area ends. We're going to add these manually on the charts until I can figure out how to get the system to automatically put them on. I've tried, and I probably can figure that out. But in the meantime, we're going to put them on manually for you. And so the green stripes mean that the oversold area is done, and it's good time to buy. Look what a good signal that was. It came in before the AMA came in. And then this one came in and was basically in total agreement with the AMA system, another good signal that we're moving up. And recently we got this one here, and it was a little premature. There was a bit more upward movement, but it's a warning. There's no doubt it's a warning sign. But a lot of times in overbought territory, it'll stay. You might get a little white zone in between some of the reds as it puts in its final moves and lingers at a top the way the stock market often does. At bottoms, it often does not linger. And those are also really good signs. So that indicator is going to be on all of the AMA charts, just as some additional juice, some additional information where you might look at it and go, maybe I'm not so sure about taking this signal. After all, we are human beings. Sometimes we have better thought processes than computers do, believe it or not. And we can take more things into consideration. That and you can see right now, this is the current candle. This is today's candle. This started at 5 p.m. today, and it's flirting with putting up a Walter Bressert, which is an indication of lack of upward progress. Now, until that candle closes, see, it's flirting with it. It would just went away. We won't know that it's definitively there until that candle closes. Another really nice thing about all the indicators I've chosen is they never repaint. They never repaint. So once it's got a Walter Bressert and it's a closed candle, it's a Walter Bressert. It's an exit. It's saying get out. It's definitive. There's no questions about it. It is going to disappear the next day. And then I wanted to show you that's the Dow Jones Industrial Average one. And the Dow Jones, one other thing I want to show you about this is how beautiful the equity curve is on this strategy. And this is one of my favorites of the auto trading thing. So I'm just going to run the analysis and just as is. And it's going to come up with the stat box. And that's the 123,000 of winning trades. Let's see if I can get these moved away. See, 123,012. I've taken all of that right off of that stat box that comes up after running the back test. So this is the exact numbers that we use. There was 34 winners in the 3 years, 29 losers. The average win $4,741. The average loss $1,317. That is the average winner was well in excess of 3 times the size of the average loser. That is how the algo can put up these huge numbers with a winning percentage just a little bit over 50%. It's 54%. And I already showed you how I can make it have a winning percentage of 60%, and there's other tricks I can use to make it have a higher winning percentage, but this number always suffers the total amount of net profit. And so I have decided, rather than setting up an algo that has a real high winning percentage and the amount of gain is incremental, one that really does stick with what most really good traders consider to be good trade policy, and that is to have a 3-to-1 risk to reward to risk ratio in mind, at least before getting into a trade. And so this one is able to meet that very difficult criterion up front. And you can see the equity curve. This is an equity curve over the last 3 years. Had the settings that we have right now on this been in place for the last 3 years, this would be the equity curve. You would be hard pressed to find any equity curve that was any smoother and better than that one. That's great. You might say, well, the last 3 years have been in a bull market. And that actually isn't completely true, because we've had 2 major downdrafts. One that remember in December of 2018, and then the other one in March of 2020. 2 really large downdrafts that occurred within the last 3 years, and you could see it really didn't phase this thing. There's just using the long trades only. And here's the equity curve using the short trade. So both of them really have been worth keeping going as part of, because if you just took the longs, it only would have made $60,000. But if you took all the trades, it would have made 120. It made slightly over twice as much when you include the shorts with the longs. So it is able to profit from either kind of market. Like for instance, that's a big winner on a losing trade. So a very smooth equity curve. I think that this system is worth following. We have every intention of having a live account and trading the signals, especially on the YM contract this year. We're still in the process of setting it up, and it looks like we're probably going to miss this first trade. But I think this first trade is going to probably end in break even, very similar to what the S&P version. So here's the S&P, and you can see it got out of the trade. It actually started the year. Its first trade is actually going to be a small loser, very small, but it's still going to be a loser. And on the S&P chart, the only difference on the S&P, 2 differences. One is We do have the actual daily sentiment index available on this particular chart. The daily sentiment index is available on some of the futures contracts we cover, not on all, like the YM contract. On the YM contract, I have something called synthetic retail sentiment that attempts to show these pink stripes. If it's if it's if it is highly likely that traders are exceedingly bullish, and it also produces green stripes when it is very likely that traders are extremely one-sidedly bearish, like they were leading into the March low last year. So I have a synthetic version of the DSI that I use in situations where the DSI isn't available. Amazingly, though, on the S&P itself, we do have a DSI filter. We use the DSI as a filter, and so if the DSI is we test it to see what the threshold is. Is there a point where it's so high that it's not worth taking a new long trade? That is the question that every algo that has a DSI on it answers. In the case of the S&P, the answer is really no. The DSI has to be below 6 or above 96 before it will refuse to take either continue to chase the trend, basically. And I mean, those numbers have hardly been reached, either one of them, in 10 years' time, probably. And so it really doesn't filter out anything on the S&P. I'll tell you where that filter does come in handy. It comes in really handy on commodities. So the DSI is much more important on commodities, but we do back test it for potential thresholds here. It just doesn't. It seems like the market can move into exceedingly, amazingly stretched sentiment conditions now with very little immediate backlash. Yeah, that's what we're seeing right now. Certainly, I mean, we got this sentiment situation that is absolutely historic, and yet the market doesn't seem to want to give back anything. Not yet, but we know from history that that will lead to more substantial decline at some point, um, unless this time is different. It almost never is. It should eventually lead to some sort of, I would say, sharp pullback. But I wanted to show, so this has the DSI filter on it, but the other thing I wanted to show you on this chart is I've got some very specific information about what to do about this new way to trade, to enter a trade. So here, on this candle right here was on November 3, and it's what we call a signal candle. It's a buy. You get the screenshot that night. It says buy, and there's a little circle below it, and so that means you want to go over here into this area right here, and for long entries, you want to look for a 5-point pullback before entering. So this candle right here, the opening price of this candle, which that would have been where you would normally go long if you didn't have the little circle here. But it did have the circle. It was an inordinately long signal candle. So looking for a little pullback. So that candle opened at 33.62. So what you do is you go in, as soon as you get the nightly report, you say, okay, we got a buy signal, but I'm looking at the chart. It's got the little circle. I'm going to place a day buy order at 33.57.75. That is exactly 5 points below, with an associated good to cancel protective stop sell order at 33.18.75. So Where did I get that stop? That stop? Well, that stop is exactly 41 S&P points below that that where the order is going to fill theoretically. And where do I get that? I got it right here. Fixed stop, 39 points for longs, 33 points for shorts. It tells you how big of a stop, fixed stop to use. No trail. And so you end up taking the long position just slightly below the entry of that candle. And it's not that big of a deal there. And then you put in an associated good to cancel protective stop order 33.1875, and that would be right here. Okay, so that would have been your stop. Boy, that thing almost stopped out. It must have. Let's see what the low tick was on that. 33.19. It came within one tick of getting stopped out, but did not, and then created that huge winner. And just remember, and think of Swim, if that's the platform you're using, that is called you right click on the chart about where you want to place your order. And if it's a buy, you want to buy custom with stop, or if it's a sell, you want to sell custom with stop, and you set it all this up right there. So you might say, well, what if it is a ETF? Okay, so at our website, elliottwaveplus.com, I'm going to, I closed that out before, but I'm going to open it back up. If you go to our resources, guides, and there's a guide here called Setting Protective Stops, a guide for Elliott Wave Plus subscribers. You go there, and there's a number of guides that talk about all the stuff that we do here and videos. But this one specifically talks about stop, and it gives an example of an ETF. So it's all explains it right here. And so the way you figure out where to put your stop is you assume that you're making a $10,000 buy at when it tells you to buy. So this you would have gotten the nightly report that says on this date, November 3, buy SSO at market at the open of the next candle. So in the case of an ETF, since the next daily candle doesn't open until 8:30 a.m. Central Time, then you could place the order that evening. I want to buy $10,000 worth of SSO, and you could kind of estimate about how much $10,000, how many shares you'd be able to buy for 10,000. You won't really know until the market opens for sure how much would be an exact 10,000. But if you did wait till the open of the market and to see what the opening price was, in this case it was 75.70. That was the opening price. That you could have bought 132 shares, and that would have cost you almost to the penny $10,000 in our $10,000 investment. Then at the same time, you want to figure out your stop. Well, this says the fixed stop is a $500 stop. So what you do is you get out your trusty calculator, and you say, okay, I bought 132 shares at 10,000. What if that $10,000 investment dropped in value to $9,500? But I still had 132 shares. So $9,500 worth divided by 132 shares would be 71.97. And that 71, did I say 97? I think it is 97, not 79. That would be your stop. 71.97. It's just that simple. So once you know your opening price, and you just do the math down, let's say I have $10,000 worth of shares there, that's 132 shares. If that's dropped by 500 bucks to 9,500, how much would each those shares be worth each? Well, they'd be worth 71.97, and that's where you put your stop. Very simple. So I think I have covered. And Andrew, are you still in the room? Is there anything else you can think of that Andrew, my son, he takes all the screenshots and help develop all of these algos and everything. Is there anything else that I have forgotten to cover associated with the premium plan that you have in mind? If not, then I'd be happy to entertain any questions that anyone has about our premium plan. And I'll just keep talking. If you have any questions, throw it in the chat. But do remember that as a premium plan subscriber, you receive all of our work. That includes everything that the basic plan there's a trend plan. The trend reports go out every night. They're just really basic charts that kind of show the trend. And we have a lot of subscribers at this level. And like here's the Dow Jones Industrial Average trend chart. And it just pretty much counts on these, the AMA green buy zone boxes and sell zone boxes and being very important, but it does have some trend following actual signals that show on the chart. We include trend charts every night for those people on that $25 a month plan on about 30 approximately different items, so they can kind of get an idea of which items are trending, what is the trend on each item, and for a more casual investor, that might be all they really want to do. And then that one's only $25 a month, and for $70 a month, we offer the screenshots. Screenshots are my Elliott wave and Fibonacci associated Fibonacci price targets for there's a good, I don't know, 140 different screenshots that go into these items. Like here's my most recent monthly chart on the Dow Jones Industrial Average, shows some Fibonacci price targets up around 41,000 to 44,000, kind of a range up there, and that we're likely to move up to that level in 5 waves and stuff like that. And this would be just traditional Elliott wave and Fibonacci, and then I also incorporate Hurst cycle analysis, as well as cycle analysis from the Foundation of Study of Cycles on those screenshots. Some people that's all they really want out of my service, is to know what I'm thinking from an Elliott wave standpoint. And then I closed out that website yet again, and would bring it open again. And then for premium plan subscribers, they get everything. Each level up that we offer has everything below it. So the trend charts go out to everybody. That's the $25 a month level. The screenshots people get my Elliott wave twice a week, in addition to the trend charts. A pro plan gets a weekly webinar and the associated recording. And that's the $100 a month thing, and where I cover many items for about 3 hours every Sunday, and that is recorded. And also, shortly after we post the recording of that, we also post an indexed version of the recording that has an on-screen menu that allows you to jump to my specific coverage on the timeline to specific items, like that jumps straight to my coverage of GDX under mining and crude oil. Click on that, and then it goes to the oil and gas section, so on and so forth. And so it's very quick to get to the item on the video timeline of the 3-hour recording of the exact item that you're interested in, or to go back and review that. So those the webinars. And then the premium plan has all of that, plus the premium plan nightly Algo reports, which has the spreadsheet and the screenshots showing all the algo signals. Oh yeah, one other thing, last thing, and then I'll be done. We do a sortable spreadsheet every quarter. Andrew puts this together every quarter, and this we will make available that you can download it and look at had our settings that we have in place today been in place for the last 3 years on these 3 items, and had you taken every trade just exactly the way the algo said, then this would be the results, the winning percentages and everything. And so if you want to look at which items brought in the most return on investment, that's where you take the initial account size required and then look at how much profit it can bring in or brought in on the back tests over 3 years. The largest percentage, the Dow Jones Industrial Average, the biggest winner, then the Russell, then Bitcoin, German DAX, S&P, all of those huge numbers. If you're more interested in winning percentage, then you might look at the ES, or if you have a smaller account or you want to get more granular, but 5 or 15, I suppose. Micro E-mini contracts of the ES, you can do that there with higher winning percentages. If you think you would never be able to stomach very many consecutive losers, the item that had the fewest consecutive losers during the last 3 years would be the U.S. dollar index. The S&P was real close, and so was the Dow. And it has, so they're all sortable. If you have a smaller account and you want to start with a smaller account, it shows you exactly which items you could trade with a relatively small account, which includes the U.S. dollar index or the Australian dollar, some currencies, some bonds, and certainly the micro E-mini contracts. So I think I am just about finished with everything I had intended to speak about. If there are no questions coming from the gallery, then we'll call this thing and put the recording up on the webinar. Thank you so much. I know some of you are active premium plan members, others are considering it, and I think a lot of people intend to watch this on the recording. We'll put it on our YouTube channel as well as a blog entry, and we'll send out everything notification when everything is out there. Thanks, Tobe. Really appreciate it. And thanks, Brian and Bill, for and everyone who's in the room who attended. And we'll see you soon. Have a good evening. Bye-bye.